What's up, guys? Stas here. So another crazy day in the stock market today. Very volatile. S&P 500 down 17 points, down about 0.5%. The Dow Jones down 282 points, over 1% in the red. And get this, guys, the NASDAQ actually went up 130 points, up 1.3%. As many big tech stocks out there, Apple, Amazon, Microsoft, all hit all-time highs today, which is absolutely crazy to say. And in this video, we're going to talk more about the markets like we always do, breaking down some technicals, and I also want to share with you guys the top stocks that I'm looking to buy right now as we're getting deeper into the month of June. And as always, I'm going to be sharing with you all what I've been doing in the markets: day trading, swing trading, options trading, and I also have some notes here about the Fed meeting today. Jerome Powell ended up speaking, and typically when he speaks, it does influence the stock market, right? So I want to go over what he talked about and kind of the plan here with the Federal Reserve. So if you guys enjoy the content, as always, hit that like button for me, consider subscribing to the channel, and check out the Discord chat Facebook group if you want to be further connected with the Strive Smart community. That's linked down below in the description, and you can also get 2 free stocks valued up to $1,400. That's also linked down below, and everything linked down below, guys, is free of charge to join. So let's go back to the S&P, and as you guys can see, and like I said a couple seconds ago, it was a very volatile day, right? Up and down, up and down. As you guys can see, S&P ended up opening at about 3210, gapped up to 3216, dropped all the way to 3180, ran all the way back up to 3220, and the moral of the story here is, as we're running up and down here, as we pull back to the 5-day, 5-minute, we can see that the S&P is trading in a horizontal channel, right? Very clear support at 3190, very clear first resistance at 3210, with the next one being at about 3220, right? So for tomorrow, what am I looking for on the S&P 500? Well, we clearly broke moving averages here on this 5-day, 5-minute in terms of the 180 and the 50 SMA, so those really can't act as support levels, at least on the 5-day, 5-minute. So I'm actually going to look and see, will we hold this horizontal channel? Will we hold 3190? And mind you, we closed at that price today. Will we hold it as a support and slowly start to fill back up to 3210? And in my opinion, if that happens, and obviously if we ultimately break out of 3220 and 3230, that's where we might see the next gap up here in the S&P 500, which, going back to that 4-hour chart, it could be up into the high 3200s and maybe even the $3,300 level. And again, some of this stuff that went on with Jerome Powell, and typically whenever he does speak, it does move the markets. It obviously caused some up and down volatility, right? And you can see that across the Dow Jones as well, and not really in the NASDAQ, because again, the NASDAQ went up like crazy. Tech stocks, Apple, Amazon, Microsoft, they're absolutely crushing it. But you guys can see here on the Dow, we opened up at 27.2, went down to 26.9, double bottomed, went all the way back up to 27.3. So up and down day for the Dow Jones, and ultimately on this 4-hour chart, a couple levels I'm watching. Support, we're right at one right now at 26.9 to 27,000. Watch that to potentially hold. If we break that, we've talked about on the channel before, we might fill back down to $26,000, and quite frankly, guys, I'm not against that. I would want that to happen, as the markets, in my opinion, in the short term, they're overheated, right? I'd love to see some sort of pull down 3-4% on the S&P, NASDAQ, especially the NASDAQ, and on the Dow Jones, right? So watch the 27,000 support. If we break, we might be going to 26,000 right on top of that 50 SMA here on the 4-hour chart. Same thing with the S&P, right? Watch 3120 on the downside. That's if we break 3190 tomorrow, right? That'd be putting us right on the 50 SMA on the 4-hour chart here as well. And when it comes to the NASDAQ, NASDAQ, guys, this thing is so overbought. It's unbelievable. All-time high was hit today at $10,155, and this thing is screaming for a pullback, right? RSI is above 80, and you guys know anything above 70 is ridiculously overbought. So in my opinion, just looking at this 4-hour chart, I need to see the NASDAQ get down to at least 9,800 and preferably down to 9,700 to the 9,600 level. And I do think once we get this next market pull down, not saying we're going to, drop 20, 30%, 40% like last time, but, next time we get a little pressure, the markets, especially the NASDAQ, I could see it going down to that 9,600 point, and honestly, that'd be very healthy, a pull down of about 4 to 5%. So overall, that's what the markets are looking like. NASDAQ is crushing it, S&P, Dow are down, and gold, everyone looks at this, well, most people do, as a safe haven asset. Gold was up 1.6% today, up $27, and a lot of gold and gold miner stocks crushed it today, right? And we'll go over those here in a couple of minutes, as I do see potential in them over the next couple of weeks. So let me know down below in the comments, guys, what are your thoughts on the markets? Now, to talk about what Jerome Powell and the vibe of that Fed meeting, and of course, you guys go and do your own research. As always, I really recommend you not just watch my videos, but of course watch the videos, guys, and hit that like button and subscribe, but also branch off on the topics that we talk about in these videos and go research them more in depth on your own. That's kind of the purpose of these videos. So we all know the demeanor of the Fed has been keep rates close to zero, right? And continue using all of the tools, and by tools they mean all the monetary policy, the stimulus, buying of bonds. They're looking to use these to their fullest extent, right? They're looking to do whatever it takes to sustain this economy. And that's kind of been what Jerome Powell has been saying, and he said a lot more of that today, right? Nothing has really changed. And he said a full recovery is unlikely to occur until people are confident that it's safe to engage in broad range of activities, right? A lot of the same, right? And a lot of the obvious things that we've been hearing. Of course, a full recovery is unlikely until more people are out and about and they're not so worried about what's going on right now, right? And they're not thinking, this is an interesting thing here, guys, and this goes to show how close they are, not how close they are, but how unwilling they are to raise rates. Listen to this. Jerome Powell said this with his own mouth. He said that the Fed is not thinking about raising rates, and they're not even thinking about raising rates, right? And they're looking to keep the rates near zero at least until 2022. And this will obviously, in his eyes, it's, he's thinking this will provide support for the economy, which will obviously take a lot more time to recover. And we also got word that, and this is obvious as well, that he expects a very weak second quarter, which I said that weeks ago. Many people have been saying that. This is not something crazy because a lot of the damage was done in the second quarter. And ultimately, he does see an expansion over time and a full recovery. But the question is, when will that happen? He's been on record saying before that this is going to be a long, drawn-out recovery. So overall, these are some notes that I pulled from the little talk, and of course you guys can go watch it for yourselves, all the questions that were asked back and forth. But ultimately, guys, it's a lot of the same, and the markets were kind of not spooked by it, but the markets were kind of up and down, volatile. And I'd love to know, what are your thoughts on Fed policy? What's going on right now with Jerome Powell? Do you think we'll get back to full recovery in the next couple of years? I really hope so. Ultimately, I do believe in America and the country. I think it's going to get back to full recovery. But the golden $1 million question is, how long will it take, right? So let me know down below in the comments, guys, what are your thoughts? Now let's go over what I did in the markets today. And today, like yesterday, was another pretty active day for me. So if you guys recall, I've been in MasterCard now for a couple of days as a swing trade. I got in at 308.75, and I ended up locking in profits today at $312.17. So I forget exactly where I locked in. I believe it was on this run up here. And ultimately, if we do the math a little bit here to see how much I made on that trade, if we're looking at percentages, 308.75 up to about 312.17. You guys can see that was roughly a 1.2% profit trade. And mind you, my goal when I'm swing trading, like I've mentioned on the channel, it's between 2% to 5%, which is why yesterday I said on my Neo swing trade I made 15%. That was one of my best trades in recent history because I typically don't aim for that high of profit. I mean, it's great when it happens. I'm typically aiming for a smaller, more modest 2 to 3% to try and stay consistent, right? Because if you're trying to hit those home run trades all the time, I'm sure you'll nail them, but you're also going to lose sometimes, and a lot of the time it could wipe you out. So be careful, guys. Another thing I ended up doing was I locked in my profits on work. Slack Technologies here. I ended up getting into this one yesterday. If you guys watched the video, I talked about that and called this one out in yesterday's video. I ended up getting in at $31.14 with my exit being at $32.32. I honestly let it ride a bit. I didn't sell at the peak here at 32.40. I actually held through this drop and I sold into the strength here. Obviously, I didn't sell and grab all the profits since it ran up to 32.60. But again, I'm focusing on the smaller wins here, guys. So from 31.14 roughly to where I ended up selling at 32.33, that was a bigger trade there of about 3.5%. So you guys can see, some of the profits are 1%, while others are higher, like 3.5%. And I also took a little loss today in Neo. I saw a big dip from about $7 to $6.50 today. I was like, all right, let me pick up some shares, $6.50, but ultimately it dropped down to about $6.20, and it triggered my stop loss at $6.35. So that is a little loss that I ended up taking today. And my final trade was Starbucks. Starbucks, I ended up picking up some shares. This is more towards the end of the day, and I'm planning on swinging these ones over the next couple of days. I picked them up at $79.80. And ultimately, guys, I'm looking at this chart on Starbucks, and I'm like, all right, we hit a peak at about $84. We sold off all the way down to $79. Overall, the uptrend is still holding, and a margin of about 6% has been opened from that. And now I'm looking, okay, what ended up causing Starbucks to go down? And let's be honest, some of these catalysts that we got weren't that great that ended up dropping Starbucks, but it's stuff that we kind of expected. We got some news that, the CV, I almost slipped there, guys. I don't even know if YouTube demonetizes that stuff anymore, but either way, CV, it ended up impacting Starbucks a lot. There's a $2.2 billion hit due to CV. I saw that they took a $3.2 billion loss. They didn't make as much money as they typically do in a quarter. They're shutting down about 400 stores over the next 18 months. The growth of them opening stores is not as quick as it was, a couple years ago, obviously. And a lot of people argued a couple years ago that Starbucks is opening too many stores too fast. But overall, guys, am I looking to buy this for the long term here? Probably not, but I think that this could be a short opportunity, a short-term dip opportunity. It might be overreacting a little bit to this news. We're already seeing some support here at about $78. So for me, am I in this with 100% of my money in my account? Absolutely not. And I'm in with about 10-15%, so I feel like, okay, there is some bad news here, but it could also be an overreaction because we already knew a lot of the bad news was coming. So I'm thinking that, okay, this could just be a quick little dip. It could recover very quickly, and I can, make a quick profit. That's kind of the idea with this trade. I could be completely wrong, but the idea is, guys, I scale into my positions, right? So if I do lose on the trade, I mitigate my risk because I'm not losing as much as if, let's say, I went in with 100% of my position, because at this point, I'm in with about about 10-15% of what I would want to build out the position. So overall, guys, that is what I did in the markets today. Those are some Fed Reserve meeting notes. Let me know down below in the comments your thoughts as always. Now let's talk about some more stocks that I'm looking to trade. And again, guys, just because I got out of work does not mean I'm not looking to trade that one. I'm actually looking to get back into that one if we do end up breaking, I believe, 32. There's a pretty strong resistance here on work that I'm looking for it to break. I think it's $33. So I'm actually just cooling, waiting until about $33. And another big one's $33.75. So if we do see some upwards push there tomorrow, maybe Friday, I might take a position. But overall, I like the profits I made there, and I'm just waiting until we do see a drop. And another one here that I'm looking to get into, and we'll talk about Tesla in a little bit here, guys. I know you saw in the title, $1,000 Tesla stock. Unbelievable, right? But another restaurant-related stock, kind of like Starbucks, I'm watching here is McDonald's, ticker symbol MCD. This one hit 203. Now we're trading at about $195. And mind you, guys, this company is facing a lot of the same problems as Starbucks, right? It's very similar business model. And again, a lot of the restaurants out there are facing these problems. But ultimately, the chart here is telling me that there's a lot more to drop. Not a lot more. It could end up going down to the 190s. But another thing it's telling me is that, okay, if we go to the 190s, we hold that 50 SMA as a support like we have been, it could be an entry point. And hey, maybe we break that 50 SMA and go down to the mid 180s, which could be even better as, from the mid 180s back up to 203 where we were a couple days ago. That's about a 9-10% potential for profit here on McDonald's. So overall, guys, I like McDonald's here on the dip. I for sure like Starbucks, as I do have my money there. I'm putting my money where my mouth is, right? And another one that's interesting here on the dip is going to be Caterpillar, ticker symbol CAT. This is one that we tried breaking out of 140, right? We filled that gap pretty quickly from 130 to 140, and now we're back to 130, guys. So easy way to understand this is, okay, we broke the resistance at 130. We're back to 130 now. It's a support. So if we hold 130, it could be an entry point. Very simple, very easy like that, right? And not to make trading sound easy, guys, it's far from easy, but a lot of the time the basic technicals are kind of easy to understand. So watch CAT, from 128, 130. This could end up being a nice dip buy up to 140. That does offer about a 5, 6, or 7% potential for profit there, and good old Tesla, guys. We got some great news a couple days ago. We saw how the Model 3 numbers in China month over month, I believe in May, they had a 200% increase. They're the quickest selling electric vehicle in China. They're just crushing it over there in China, guys. And today the stock hit $1,000 a share, $1,032 to be exact. And mind you, guys, this stock was $200 about less than a year ago. So if you were to buy $1,000 back then, it'd be $5,000. So that's a 5x, which is unbelievable. So for me, I'm looking at Tesla now. Okay, this thing's a bit overheated. You can't lie, right? This thing is a bit overheated. So I'm looking at it and I'm like, all right, old resistance, we know one of them's at 940. Another one's at about 970. So first target I have here on a pull down is going to be at $970. Next one is 940. And if we do get back to the 800s, around 880, 890, that's going to be the swing trade entry point, right? And when it comes to swing trading, guys, which is what I mostly do, if you guys didn't really already notice that, I mean, I'm pretty sure it's obvious at this point. When it comes to swing trading, a lot of the time, patience is, well, most of the time, you need a lot of patience. It's a virtue, guys, because the key is not to force entry points, but rather wait until the entry points present themselves to you. And once you see that opportunity and you're able to strike, if you have that cash aside, right, that is when you're able to make the good money. And, at this point, Tesla, it's a FOMO. It's fear of missing out if you're looking to get in at this point, in my opinion. That's why I need to see the pull down to 880, 900. So I'm keeping an eye there on Tesla. Another one here is Beyond Meat, ticker symbol BYND, up 1.44% today, up a little bit over $2. And if you guys see on this 10-day, 30-minute chart, this is what I'm looking at here for Beyond Meat. And today's price action was very, very bullish. Notice how over, I'd say the last one day, we were downtrending from 163 down to about 151. And pre-market today, I drew this trend and I was like, all right, if Beyond Meat breaks out, that's going to be very bullish, right? That's telling me, all right, the bulls are getting us out of the resistance. More momentum's coming in. The stock could push up, and especially if we close above the old resistance as a new support, which we ended up doing. So we broke out of the resistance, held it as a support. So now for tomorrow, I'm looking to see if Beyond breaks this new downtrend that it ended up forming here, heading into the close of the market. And you guys can see it here on the daily chart. It's kind of in this wedge or this intraday chart rather. So watch for the break here from 156 up on Beyond Meat. And oh my God, I just realized it went to 163 earlier. I didn't even realize that. So if this breaks 157, guys, watch out above for Beyond Meat. I could easily see this one going back up to the mid 160s. And with this China deal that it did get, very strong deal, very favorable deal. I really do see a lot more potential in Beyond Meat. I'm bullish on the stock in the short term overall, and we can see on the yearly chart there's a lot more potential, maybe back to the 170s, 180s. Just watch out for what it does on that technical break heading into tomorrow. That is ticker symbol BYND. And another one here today was BA Boeing, which saw a 6% pull down about $13.33. And this is another one that I've been watching, not to long-term invest in, quite honestly, guys, because they don't pay a dividend. That's kind of one of the big reasons why I would want to own Boeing here. But as a trade, I'm looking at it, right? And we've talked about in previous videos, patience is key. I just said that in this video. And for me, 185 is the key price to get in, right? And if I'm patient enough and it presents itself at 185, I'm going to most likely buy it as a swing trade, right? That's an old resistance from back in the recovery day. It went from 90 up to about 180 back in March when the stock recovered after the big drop in the markets. And that's also right at that 50 SMA on the 4-hour chart. So overall, that could end up being a pretty strong support here on Boeing. So watch out, 180, 185, 190. That could end up being an entry point. And to end off the video, like I said earlier, let's just take a look at some gold stocks today. We got a big breakup here in gold. Very bullish move, in my opinion, here. And the technicals really don't lie. You guys can see we're breaking out of the downtrend. We're kind of in a wedge like we were a couple weeks ago when gold was at 1788 and it went down to 1700 and it popped out, right? You guys can see that. So overall, watch for the next resistance on gold. I'd say 1760 is a big one. Another big one is going to be around 1770, and 1790 is a big one as well. So if we break 1790, 1800 could be the price target. And as we get out of this deflationary environment, guys, and inflation really starts kicking in over the next couple of months, that is when I see gold really shooting up above 1800, right? And you guys know, although I don't own shares of GDX right now, I do have long exposure from call options, right? I have call options that expire, I believe, September 21st, $40 call options. So today's action was very good for GDX. We broke out of that downtrend. We broke out of both moving averages here. We broke above 33.80, $34. So this is looking good for the minor stocks. Again, I have options, not shares at this point, but if we do end up breaking 34.50, 35 tomorrow, hey, I might end up buying some shares in this ETF. So overall, guys, that is it for this video. I hope you all enjoyed it. If you did, hit that like button for me. Consider subscribing to the channel and let me know your thoughts on the markets. I know we talked about a lot today in this video, Fed, markets, gold, what I did, technicals. Let me know what you guys think about anything down below in the comments. And again, if you want 2 free stocks from Webull, one of them valued up to $1,400, check that link down below in the description. All you have to do is deposit $100 into the account, and that is how you get the 2 free stocks. So I'll catch you all in the next video. Thanks again for watching. As always, stay safe out there, guys. Peace out. What's up, guys?